In this video, traders, we're going to look at the Fibonacci confluence trade. Stay tuned. Hey traders, a very warm welcome to you. Okay, so this is a Fibonacci confluence trade and we are looking at a 15-minute chart. Give or take, you can probably go up to an hourly or 5-minute, but to be honest, it doesn't matter. What we're looking at is the bigger picture here based on prior day's action. But it's a day trading strategy. It's not so much a scalping strategy. It's one to grab hold of those kind of secondary moves in the day or primary moves in the day. And we see actually how this works and how it fits in with your own strategy and whole trading outlook, because it's one that actually you can end up getting on a multi-day move, or you just take what it gives you in the day, your choice. So FX markets, look at Euro US dollar, Pound US dollar, USD JPY, US dollar CAD, AUD USD. The majors, does it work on the minors? I've not tested it, but you can go and check it out for yourself, and if it works, let me know in the comments section below. Okay, so what are the rules of the game? So I've got in front of you a Euro US dollar 15-minute chart, and I have put standard pivot points on. And in TradingView, I've got in front of you, they're just the standard pivots on whatever charting platform you've got. They're probably in there already. If they're not, very, very simple to code. I just got the pivot point S1, S2 put on. You can have S3, S4, etc. Really, this only uses the pivot, but I like to see kind of where S1 and S2 is just for reference purposes. Now, the idea of this is that every day you're looking where the pivot is. So the pivot is based on the prior day's action, and it's going to pass through to the current day's trade. What you're also going to do is, if price is trading below the pivot point of the prior day, example I've got in front of you is Euro US dollar, I'm going to put up Pound US dollar in a second. Price is below the pivot is in blue, price is trading below it. We're going to draw a Fibonacci retracement going from the high to the low. Now, I've cleared off a lot of stuff from this fib because you can make this chart too busy. You know what fib's like, you can have all your lines in it, it can look completely cluttered, you've got all your shading in. I've stripped that all back, and all I've got is the high, the low, the 0.382 and the 0.5 retracements. Okay, because this is how this is going to work. Now what we're looking for is, once we've drawn that, we want to use the extension part of the tool, so we extend the levels over to the right hand side. So we're drawing on the prior day. So the prior day already pre-drawn with our pivots, we add our fib on as well, and now we look at the current day. So if you can imagine now, let me just dial this over, make sure we're not clearing stuff out. This is the day that we're looking at, the day I've got in front of you, and move it out of my face. The day in front of you is here. Okay, this is our 0.5, this is our 0.382 on the fib. Double check that. Let's go back. Yeah, so our light, we should change the colours really, shouldn't we? Let's put that as red. Let's make life a little bit easy for ourselves rather than a different shade of green. Okay, so to be honest, it doesn't matter, because the point of this is we are waiting for a retracement back to the pivot, the 0.382 or the 0.5, when there's a confluence, i.e. the pivot is very, very similar level to the 0.382 or the 0.5. So it's a confluence of the fib retracement and the pivot point. When we see that, we take our trade entry. Okay, so this is a great example for one here now. We're taking our trade here, we've got a pivot point here, market's pulled back to it, it's a confluence with our 0.382, it's a confluence with our 0.35. This zone is our short entry zone. This zone is our short entry zone. Ultimate targets are going to be the prior low, which of course is going to be our 0 on our fib, or prior day's low, however you want to have in a market out, or the current day's low if you're feeling brave. You can play around with it. The point is, this gives you a good reason to initiate a trade back in the direction that you want to take. And I would advise going one step further. I would advise saying, hey, you know what, I need to look at the candlestick pattern. I need something that gives me a little bit of a trigger, whether that is like a bearish engulfing, whether that is a spinning top, whatever it may be. You know the score, guys. If you're a subscriber, and by the way, I appreciate your subscription as always. You can go and check out the candlesticks school series that we've done, and go and check out some of the talked about candlestick patterns. The good thing about candlestick patterns is you can bolt them into something like this, and you can say, okay, I like this trade idea because I like to be able to trade something that's moved quite nicely, had a good range the prior day. I'm looking at a day 2 type play. We push lower, we push back. I'm looking for an area to initiate a trade back in the direction of the prior day's action. This is great for you. Pivot point, you've got your Fibonacci retracements. It's a good level to kind of say, okay, now if I see some price action type candlestick patterns, then I'm going to pull the trigger on it. Let's look at Pound US dollar, last one. We have prior day's action. and we've automatically drawn in the pivot points R1, R2. Price is below the pivot as it opens, so we get our fib here, and I've got it ready for you. Fibonacci retracement. We go from the prior day's high to the prior day's low. That's already drawn in. Now you can see the confluence we've got here. Let's zoom in on that a little bit. Try not to delete it. You can see here is our confluence, right? We've got everything is in one little cluster. It's a nice place to initiate a short position. However we do it, whether we do it on a candlestick that pierces through and doesn't close, whether we do it on a double top, you get the idea. There's so many permutations of this. This is why it's so powerful. The point is you've got now a little zone where you can get excited about. And of course, you take the short entry here, you've got the confluence of the pivot, you've got the confluence. Let's scroll back and see exactly where we were. You've got the 0.5, you've got the 0.382. That's the zone you're looking of interest. Pushes back to it, fails, rotates back round, and you just about get your exit out before the end of the day. However, as I alluded to earlier, guys, this is the sort of thing that you can hold, because it is potentially something that's going to give you a bit more juice. You can hold for the next day to hit that current day's low, your S1s, your S2s. If you're feeling excited about it, you can trail it, and obviously if you trailed it, you'd be stopped out at this point here. The idea is that it's prior day's been pretty decent. Second day, you get the follow through. You're not chasing, you're waiting for the pullback. There's the confluence of the pivot, your Fibonacci retracement levels. Hit your short, play around with it, have your stop a little bit wide to allow for the potential meat in the trade. Take it, extract what you want out of it, move on. You're not going to get this every day, of course. You're not going to see the confluence every day. The point is, once you've got your pivots in, you check in the day, you say, hey, my pivots are there, put my Fibonacci retracements on. Do I have a confluence? No. Then the trade's not on. Do I have a confluence? Oh yes, I do. In US dollar CAD, there's decent confluence. I've got a decent day's range. Let me set alerts for that, so as it approaches it, I can look at it and say, hey, what price action do I want to see to initiate a trade? Anyway, guys, that's a Fibonacci confluence trade set up. Have a look at that. Let me know how you get on with it. Check it out in the charts of the markets that you trade, and maybe you can stick it into your trade plan. Good trading. Take care. See you next one. Bye.